Good afternoon, everybody. Welcome to your Thursday edition of the TraderMerlin Show. My goodness, what a wild day it was out there today. Good to have everybody with us. I guess I can give a nice shout out. Since Big Eb decided to grace us with his presence today, we'll give a shout out to everybody. We got Les, Margaret, Ron as well. Ron, I'm actually on a mission this weekend to find that bottle of whiskey with that donation you left me, so I will have that next week when I'm back on the program. We got Bo Trader Pepper, Big Eb, of course, Doug, Boss Poopa, Tom, Christy, Thomasina, Gallo, Katut. We got the regular group here. Vernon, Dana, Augustina. Good to see everybody. Hope you all had a great trading session. Goodness gracious, we talked about that yellow box for quite some time on the show, at least the last 2 weeks. And lo and behold, we had some wicked breaks down below that today. And unfortunately, not unfortunately, I love teaching my crypto class, but I teach my cryptocurrency class Pacific time every Thursday at 10 a.m. until noon. And of course, anybody who was watching these markets today, they were kind of floundering sideways, doing nothing. And then all of a sudden, we had a significant and aggressive break of the yellow box. We'll call the downside breakout will be the topic for today's show. I guess I got to ask everybody, since I always like when I engage you in chat and you make the chat box fly real quick. What was it do you think caused? There was a specific time where all of a sudden it's like the market just said, enough, we're tanking. What do you think happened? Or what came out, what was announced, what was disclosed today that all of a sudden made everybody freak out about the markets and just basically back away from it and let it fall? There was definitely something out there, and I don't know if it's the only catalyst, but it just kind of coincides with the timeline as far as announcements going on today. And to me, a couple things. Hey, good to see you, Chris. Brennan's, he doesn't come here too often anymore. He'll grace us every now and again. But what happened today? I'll look at some economic announcements here just so we can see what happened. But we'll look at the calendar for today. You notice here at the top, we can start off with some of the European stuff. Of course, at the wee hours of the morning, this is all East Coast time. Yeah. This is all East Coast time. Correct. You notice that they had the main refinance rate, which at 7:45 in the morning. That was in line with expectations. No real big deal there. And we can take a look at the euro here in just a little bit to kind of see what the impact of that was. It was actually a pretty big down day for the euro as well, even though they kept rates right where they're at. But you notice for us, we had unemployment claims number that was a little worse than expected, right? We went from 202 up to 229,000 unemployment claims, which means more unemployment, which seems to be in line with what's going on with the other economic data. You have GDP slowing, you have inflation high, you have retail sales numbers kind of dropping. So this would not be any surprise. The trick is, does this continue to surge? So we had another announcement as well. We had natural gas storage, which that was not that big of a deal, even though we had, for those who are following natural gas prices today, it was a pretty exciting day. I mean, you had a nice upside move of almost 4% coming off of a demand zone, which you can look at that as well. But then we'll look down here. The 30-year bond auction. So yields jumped from 3% to 3.19%. And notice the time. That's right around 1:01 p.m. So let me go and bring up the equity market indexes here for us. And we'll start at the bottom and work our way back up. Here is the Dow Jones Industrial Average down 1.77. And that's as of right now. Right, if we look at, obviously that's not the official close. That's as of right now, which is, an hour after the equity markets have closed. Big red candle, which we had this line drawn at 32,706 was kind of our line in the sand, and it ripped down below that one today. But I'll split it into a 5-minute time frame just so you can see what really went on. And you notice that we started off a little bit weak, right? Started to rally a little bit, but came right back down to that 32,706 level and then completely fell apart. And you can backtrack from time here. Now, my clock is on Pacific time. Yeah, I'm on Pacific time, so I got to add 3 hours to get to that. But let's just look at 10 o'clock, right? So right here is 10 o'clock in the morning, which would be 10, 11, 12, 1. We're looking at 1 o'clock Eastern time. This is right as the bond auction number came out. And so I think that what part of this was the bond auction coupled with some of the bad unemployment numbers. And then all of a sudden, people just started to back away. Now, I see a couple of different things in here. Tom says, not a catalyst, ever just an excuse. Exactly. That's true. It's always an excuse. We can point the finger in afterthought and say, hey, this is what happens. Biden gets the worst presidential marks of any president ever. Well, that doesn't matter at all. Who's president doesn't make a chart move on a 15-minute basis, so we'll move on to something different from that. Getting ready for the bad CPI numbers. Yeah, That's good, and we'll talk about that at the end today here, Les, but we have CPI numbers coming out tomorrow. But I think the table has been set here with rising bond prices. And again, we started Operation Quantitative Tightening, which means that they're selling bonds out there. They're saying that there's not a lot of buyers for those bonds. Now, that's the 30-year auction. We also have a 10-year auction, which wasn't today. But those yields are starting to rise. As those yields continue to rise, that puts pressure on the economy. So I think a lot of this had to do with the bond yields. And let's just go out and take a peek at the other bond yields before we look at the other indexes here. Here is your 10-year. All right, so there's your daily for the 10-year. There's the daily for the 10-year. Again, we're still just slightly trending up. I am targeting at 3.25. I think that's your next logical stop here for that 10-year. Here's the 30-year, which we just looked at. Again, it's not at the highs that it was from back on May 9th, but it's starting to move back to the upside, showing some strength. And, of course, this means bad news for the markets. I think part of it also has to do with just where the markets have been trending over the past week or so. We started with the Dow. Let's go up the ladder to the Russell, which is the only one that didn't break through that area of demand. We had 1842 kind of as a line here, came right down to it, but didn't break it. So on all things considered, even though it's down 1.85% today, Russell looking pretty decent. All right, NASDAQ. This is where it starts to get ugly. Now, I didn't have a yellow box drawn on the NASDAQ, but let's just do something like this. Let's go to an hourly time frame and forget about that drop. You look back here over the past week or so, you could argue, I'll be conservative here and just say to these lows. All right, there's your break, and we ripped down through that one. Now, you could have moved this up as well, but bottom line is we did break. For those of you who are trading the NASDAQ 100, I want you to notice where we fell into on this 1 hour time frame here. Right, you had going all the way back to the 26th of May, you had this rally, you had a base, and then you had another rip rally out of it. Now, as we sold off, where do we end up coming right back down to? We are dead into that area that we saw going all the way back here to the 26th. So nice pullback into an area of demand. I guess the big question for everyone is, will this hold? Will we see the NASDAQ stop here and rally back to the upside, which is, again, right at this number that we have here, which is 12,254. Now, I didn't draw this blue line in today. That's been there, but that was the target for a pullback. Let's keep on. I guess we got to go to gold. No, not gold. S&P should be the next one. Yeah, here's the S&P. This is the one that was the most important to me, which is really just showing the same picture over and over again, which was we had a level of 2084. All right, that was the level we were looking at. Broke down below that, so hopefully some of you got short. Unfortunately, this all happened right as I was doing my class. So I was really disappointed I didn't get a chance to jump out. I'm looking at the corner of my eye because I've got crypto screens up and I was moving some money around today for the class and showing all kinds of, talking about the new bill that's in front of the Senate about crypto and salivating at this sell-off here, but no, not really much that I could do. Pretty good one, by the way. So that's where we ended for those major market indexes. S&P down to about 2.2%. Now I'll move up the ladder a little bit. We're going to go to here's your gold on a daily time frame. Not really anything special, right? It's just been traversing sideways here, so big deal. Then you go to the crude oil, still moving up, but although it's a slight down day, it's still moving to the upside. We have the nice trend intact. And then last but definitely not least, Bitcoin. When's the last time you can say that Bitcoin only moved $15? Whew. Sneeze incoming, I warn you now. Same picture, just traversing sideways, stay inside that yellow box. So as far as the topic for today, with the downside breakout, definitely with that S&P 500. I see that Mario says ES also looks to stop in a demand zone. Sure, we can look at that on a different time frame. But you rip back down to here, and you can go back. It's close. I wouldn't call that necessarily a demand zone, right? I think you're on the ES continuous. You're past that. So for me, that one definitely no, but some of these other ones, NASDAQ was clear as a bell. The Russell also came down to this origin of this last big move up, which is on the 2nd of June. You can see this big pop up. That was an interesting spot for it to stop. I kind of have it mapped at 1842 because of this big move here. Now, I know a lot of you will look at this chart and say, well, Merlin, if you're using this May 27th price point for the origin of this really big move to the upside, it's been violated because of this, and you're right. But I still put those lines on there anyway because I believe markets and people have memory of certain levels, and they'll come back there. Yeah, let's not go political. It doesn't matter who's president. This is a price chart. What matters in this case is economic data. No need to polarize our audience here. So it doesn't matter who. We'll just say President A. You can call him whatever political party you want. Makes no difference. Let's see. Pick one. There might be a rate increase. Yes. Well, I guess we could dig deeper into that, Tom, and say, well, might there be a rate increase? Well, let's go over here and look at the probability, right? Obviously, next Wednesday, we got less than a week to go. 5 days, 20 hours, 48 minutes, and 13 seconds until we get that rate announcement. Right now, they're putting in a 93% probability of a 50 basis point increase right now. That's pretty good, and that's in line with expectations. What is noteworthy, though, is if you look at the odds for a 75 basis point increase, it's been slowly ticking up. And I think that's just over the past couple days. You notice here, we can look at, actually, it ticked down today. A week ago, it was a 2.6% chance of a 75 basis point increase. Yesterday, it was 8.2. Now it's 6.8. So pretty slim chance that we're going to get a 75 basis point increase. Right now, 93% chance we'll get a 50 basis point increase next Wednesday. And that's pretty much what the market's hanging its hat on. Unfortunately, I won't be doing a show tomorrow to walk you through this one. But this number might change dramatically if that CPI number comes out really bad. If this number comes out, the CPI number comes out aggressively bad tomorrow, you could see this get back into the double-digit probability of a 75 basis point increase tomorrow, which would be very interesting. Or not tomorrow, next Wednesday. So that's the big stuff out there. I think it's important to look at these levels and kind of reevaluate and say, all right, what am I looking for now? You know, if we look at this daily time frame of some of these indexes, you know, we're still kind of range bound between these major turning points. So let's just the S&P 500 because that's the dog that wags the tail. If I were to look at a current spot for the S&P 500 or where it might be headed to, clearly there's some overhead supply in that yellow box. We'll get rid of this one. And then, you know, you got a target down here below. Now, right now, I'm just going to draw these boxes rough, right? I like to draw them rough like this, and then what I will do is I will look at those on a smaller time frame to pinpoint kind of where I want to design those levels. I do it differently than a lot of other instructors, so if you guys are OTA graduates, don't hate me. I do it my way. That's just the way I am. Let's see. So here is, right, here's that yellow box that was drawn. Well, this is interesting. I actually see a couple different places I might be interested in this one. You know, you obviously going all the way back down to that 3,800 mark would be good. But you can see there's also a little spot right in here, which has not been retested. So there's a couple little zones I'm interested in. Let me see if I can go out here to the hourly and make this look a little bit better. Okay, and we'll drag this bad boy to where it should go. So, you know, now if I go back to the daily, I have two levels that I'm targeting here. I know, sorry, my charts look like hell. There you go. So those are the kind of the two spots I'm looking for going forward here. Oh, great. That's where I'm headed. And then if you really look at the main range here for the S&P 500, let's just do a fib retracement from the peak that we have back here on May 4th to the trough that we have on May 20th. And you'll notice that we are almost dead center 50% retracement. All right, we're just slightly past 50% retracement on this one. So, you know, we're range bound. Range bound on this one. No big deal. Wait for those extremes before you start pulling the trigger. Today would have been a great downside breakout trade day had I been sitting there trading it. Unfortunately, I did not. I hope that some of you did. Unfortunately for me. Let's see. If NQ tapped the demand zone and turns back up, it should pull the ES up. Yeah, there's a lot of chatter around, and of course, you know, everybody has a theory on it. You look at what happened today. All the headlines are pointing to tech, right? Because NASDAQ was the worst performer out there. And, oh, tech dragged the markets down. All right, fine. We'll let that be. Since it's at this demand zone, and I personally think you will get a small bounce. I don't know how strong it's going to be. It really depends on the conviction of the sellers out there. If we do get a small bounce, yeah, it should lift up that S&P as well. Obviously, there's a lot of tech components in the S&P 500, but I wouldn't hang my hat on that one. You know, if anything, right now I'd be trading lighter because it's so choppy. It's been kind of all over the place, and you have some major announcements happening here in the next couple days. Certainly tomorrow's CPI number. We have next week PPI number, as well as some other big economic data. So it should be rather exciting week for everybody in the trading world. Now, other thing we had to look at was the dollar index, which had a beautiful move up today. I actually thought we'd come right into this area of supply, and we were kind of sitting near it. We ripped right through it. We're at the upper end of that range. To me, you're going to see $1.05 here on the dollar index, which is a pretty significant number. We get to $1.05, and then after that, you have smooth sailing. Remember, they're removing dollars from supply. This whole quantitative tightening thing, they're taking dollars off the table. Once you get to 106.50, you break that, and you've got some smooth sailing for a long, long period up in front of you. So keep your eye on that dollar index. I think that's going to be key. I would say that the three main things I'll be looking at for the next month. Number one is going to be the dollar index. And this is a monthly. Let's go to a daily. Number two, it's going to be the 10-year bond, because I want to see if this does, in fact, do what I believe it's going to do, which is these bond yields keep rising. If these bond yields do keep rising, what that means is you're going to see that dollar keep rising. And when that happens, the third component I'm looking at should tank, and that's going to be the S&P 500. So, those two lower levels we have there, getting all the way down to 3,800 on the S&P 500 becomes a very real reality if we start to see bad economic data, bond yields increase, and dollar rise. We have a perfect storm going on. Not to mention, I actually wanted to bring it up today, but I don't like quoting things unless I can verify it. But there was some real estate investment firm that was talking about, proof that there's the housing market crisis, and all these numbers were just like appallingly bad. Like the massive decline in people looking for refi, the number of people looking to open up new loans is cratering. People are lowering their prices significantly across the country for the homes for sale, which is starting to set up right that stage. Nothing's fast moving with regards to real estate, but it feels like more and more stuff is starting to line up. How soon might we see parity in the euro? Well, let's look what happened out there today. Obviously, you had a no call, meaning no change in the announcement for the euro. If the EU does not raise their rates, parity is going to happen very soon. Now, let's go to a weekly here. And we've got the parity line drawn on there. And you notice, it really is not that far away. It really isn't. Let's go to a percentage move. We go roughly from there to there. We're looking at, come on, Merlin, about a 6% decline. That's nothing that dramatic considering what it's done. Blake, could we see it? Not only could we, I think we will see it. My guess is you'll probably see it. Let's see, what are we in? We're in June. You get to August, September, it would not surprise me to see us back at parity. I know it seems rather aggressive, but I think it's going to get worse. They've made it very clear they're not raising rates. Everybody else is raising rates. Remember, when you raise your rates, it makes your currency more appealing for others because of carry trades, meaning if they hold the euro, they would get paid. Right now, most people are selling the euro. Why? Because I'm not earning anything, right? We talked about the carry trade the other day. You buy a currency that has got a high interest rate, and you sell the one that's got a low interest rate. I use the, I think I use the U.S. dollar Japanese yen, or no, Australian dollar Japanese yen as an example. If you look at the Australian dollar, now you're at 1.5. Sorry, was it 1.5? I got so many numbers in bed. Let's just say it's 1.5. I don't believe. One sec. Let me pull that one up. I want to make sure I got the real numbers. It wasn't 1.5. They went from 0.1 to 0.35 to 0.85. So they're at 0.85. So they have 0.85, and then you add on the negative 0.1 for Japan, you're looking at 0.95% to hold Australian dollars. Well, it gets better if you're looking at US dollars, right? We're at 1% right now. So if I bought USD JPY, I would now get 1% plus 0.1%. If they raise by another 50% or 50 basis points, I'm now going to get 1.6% to hold US dollars. So think of everybody around the world that's got currency earning nothing, like the euro. I can now buy US dollars and earn 1.6% interest on that as being a carry trade. Why would I not do that, right? So you're going to see demand increase for that US dollar, and that is part of the problem for these equity markets going forward. Great questions. I have dollar up on the screen, future euro, lower screen. Watch for dollar to move. Euro is usually late. That's how I have made a few bucks. Yeah, look, if you look at the dollar index, it's 50% euro anyway. So, which one's the dog that wags the tail? In this case, I would say it's the dollar that's moving the overall indexes. The Fed has been accommodating the market since since the new monetary policy started and Yellen's quantitative easing. They are very quick to lower rates, but always very reluctant to raise. Of course, and I'm hearing for people saying, why don't we raise a full point? Why don't we raise 2 points? It's like, you can't do that. You can't just jump to such a big number because it's the impact on the economy could be negative. Now, they're very quick to cut by 1 point Because regardless of what you do, it's going to be a huge boom for the markets, right? If you cut. But when you start to raise, remember, you're slowly choking the economy. You raise too much, it could have an adverse effect. A lot like that Poke Bowl place I was telling you about. I cannot believe that this place went from the most popular poke or restaurant in this whole strip mall area, line out the door every single day, to no customers inside. What happened? They raised too much, too quickly. Same thing with raising rates from the Fed's perspective. They're not going to raise unless there's an absolute emergency. I mean, 50 basis points does make a strong argument that they're in deep doo-doo, right? That they got problems. It should be 25 basis points and another 20. That's the way it should be. But in this case, if they went 75 basis points, it would tell the public that the Fed's panicking. And if the Fed does that, then I think you'll see the markets really start to tank. Let me see here real quick. MB. Hey, I'm wrong side of a trade that was call. I have 4 weeks to expiration. I keep buying. That is the right plan, or I have to get out. I'm not quite sure I understand it. So you're in a losing trade right now, and it's going against you, and you have 4 weeks to expiration. So I'm assuming that you bought calls. So you bought calls. You have 4 weeks to expiration, and it's going against you. That's what I'm led to believe. So if it keeps on going down, you're just going to lose your premium that you paid for those options and ultimately lose all of it. NB, it's not a question of if you keep buying that's the right plan or have to get out. It's up to you, right? Depends on what your time horizon is. If you feel that these markets are going to keep drifting down, and we can look at some price charts here, and things don't look that rosy, I don't think it's going to be an absolute collapse for the equity markets, but I do think that the trend is going to start to continue back to the south side. I think that is a higher probability than seeing the market rip to new highs. So that said, if you bought calls, you're probably going to have those expire worthless. If you bought puts, you're probably going to earn on those. And this is, again, just my hypothesis about where the market's going to go. I realize that many of you are going to be looking at this thinking, hey, market's going to go up. Great. And I don't care if you guys agree with me or disagree. That's not the point of this program. It's just to, have a community where we can talk about markets. If you think the markets are going to go to the moon, awesome, great. But have a plan in place. So if you're wrong, you don't lose a lot of money. And I think, NB, you might be in that situation right now where you've got some calls, Look at this chart. If I was to say, give you a mantra, and you had to pick a direction, either up or down, and I said, the trend is your friend until the bend at the end, what would you make the argument that the trend is on this chart right here? I mean, it's pretty clear that this is a downtrend, although the fact that we broke this high right here is positive. It's still in a broader downtrend. So if you're buying calls thinking this market's going to rip up, you're definitely going against the grain. You've got the harder trade going. And to me, I just feel like probability says it's going to keep on drifting down. So if I did buy calls, I would just close them out, take the loss. But that's just me. I sold my put yesterday, bought call right before the drop. Oh shit. Murphy's Law of Financial Markets, right? Sorry, NB. Patience, my friend. You got to be a little patient here, especially when you look at, I took the yellow box off here, but the yellow boxes will help you. You see a lot of my charts have just simple, basic lines. I try to keep it as simple as possible. Let's see, which other one did I have a yellow box on? NASDAQ. If I was long yesterday calls, if I was long puts, right? So like I bought some puts. Well, at this point, I'm not feel like doing anything, right? I would not have had any reason to close out my puts. I have even more reason to add to my puts, not buy calls, right? Just by what happened out there today. So, I think having these guardrails for you, if you will, showing kind of overhead supply, lower demand, could have helped you out a lot there. Anyway, I think today's move was the market pricing and the Fed tapering and the triple witching of expirations. Certainly, triple witching expirations is going to be a factor to it. I think a lot of it is pricing in that. I think a lot of people are skeptical on the markets and they're hinging on this economic data. So I think tomorrow's number is a really big one. I think my gut tells me that they're going to cook that number and make that CPI number look better than expected, just so we can be like, oh, it's okay, we're okay. I think at this point, Fed and government officials are doing damage control. And they're like, okay, we need to calm down everybody because the tension is starting to build. I'm dumbfounded every time I go out to go eat nowadays. Everything seems like it's more expensive every day I go. Some of my favorite restaurants, I'm just now like, you know what, I'm not going to go. I'm going to stop eating there. There's only one that I would go to, two places I would go to without question to support them no matter what happened with the economy and prices. But every place else, I'm not going to be eating out much anymore. The prices are just way too much for me. As John O'Donnell says, cure for a high price is a high price. Let's see. Mr. Pill is inside celebrating some great trades. What? What else do I got? Merlin, you think the Fed will pivot like everyone's hoping? No. I don't see what they can do. I think the Fed's trapped. We've talked about this a ton. The Fed has, you're a damned if you do, damned if you don't, right? What's the Fed's mandate? They have a dual mandate. Oh, I can cook, Dave. I love cooking, by the way. I like to cook more, but I like eating out and socializing. I like just sitting down at, one of my local haunts here. I'll just sit at the bar and have dinner, and I'm always meeting new people and talking about different things. I'm a social person, so for me, I love doing that. Where was I? Pivot. Okay. So put yourself in the Fed's category. They have a dual mandate. What is that dual mandate? Full employment and stable prices. Right? You got to keep that dollar relatively stable. That's their dual mandate. Right, boss? 100%. They trap themselves because what can they do to control inflation? There's three mechanisms the Fed will use to control inflation. Number one is you raise rates. Okay, check, doing that. Number two, you remove money supply. Check, they're doing that. They're selling bonds, right? And they're taking that money and removing it from supply. So you're removing money supply. So you have fewer dollars chasing the same amount of goods and services. That usually results in a decline in prices. And then the third one is raise reserve requirements for the banks. Right now that's at zero. They have not done that yet. I'm surprised they have not. But to me, when you do those three things, you jeopardize the other mandates, right? If you start to raise interest rates, remove money supply, what that ends up doing is choking out the economy. It slows growth. And remember, their mandate is full employment and stable value of the currency. So if they start to do that, what's going to happen to the unemployment numbers? I mean, we saw an uptick last week in the unemployment numbers by 0.1%, I think from 3.5 to 3.6. Well, that might be the first little blip, and now a stair step up. We saw some bad non-farm numbers. We saw the unemployment claims today were higher than normal. So all of a sudden, I think people are thinking that that's turning. The actions from the Fed to fight inflation might actually start to turn this boat around for the negative, meaning all of a sudden we go back into recession. Then what do? They go back into quantitative easing again, and all of a sudden we have super inflation? They're trapped. I don't know the solution. I really don't. Margaret says big layoffs coming. I think what you're going to see is gradual layoffs, right? And usually, especially if it's really bad economic times, those gradual layoffs will start to get much bigger. I mean, hell, we saw a lot of the crypto firms, which is just a segment of the market, but you have a lot of them are laying off. You've got Kraken and Coinbase laying off aggressively. There was a couple others that were laying off pretty heavily as well. I think that all starts to have an impact on the broader picture, right? Small layoffs lead to big layoffs. Big layoffs lead to, more unemployment. And now you begin this big downward spiral. So, my big advice to everybody in my personal world is stop spending money, save your money, make sure you have your debt obligations covered, have a little bit of an emergency fund just in case things do start to get bad, because we just don't know. We just don't know. What else do I got comment-wise? Failed it. Me too. It's a lot of stuff that good prices have decreased the size of the meals. Yep. Just shrinkflation. Gotta love shrinkflation. And using the wrong things to fight this inflation, they're destroying the economy. Yeah, and Bill, the tough part is we can all, they can pat themselves on the shoulder and say, hey, we saved this economy during the financial crisis. We saved this economy in the dot-com. We saved it during... they'll always have an upside and a downside, just like everything. And at a certain point, everything comes to a head. The chickens come home to roost, they like to say. Let's see. Look at the staples price at the grocery store. Yep, totally, Margaret. It's jaw-dropping what the prices are. I'm leaving it alone. Exactly. And plenty of lead, huh? 45s. Well, I mean, if you're a gun person, sure, guns are always good. But it's interesting. I do think that the recession is upon us. I do think we're going to start to see that. I also do believe that you're going to see Not an aggressive seller. I don't think the markets are going to crash. I think they're going to just drift lower. But that's just me. Let's see. I want to get to a couple questions here since I encourage you guys all to send in questions on the YouTube page. Whatever video you're watching right now, you can put in comments down below that. That, I think, helps me out. I don't know. I don't really know, but that's usually where I go to first. So here is a question from Les, who's here with us today. He says, the Russell is small cap, and they say it is not affected much by international events. But do some of these companies get their materials from overseas, or are most of these companies domestic services? I would disagree with that initial statement there that says that they're not affected much by international events. I think that there is the dog that wags the tail is the S&P 500. That's the market that moves all the markets. Now, when you have a robust market and things are looking really good, generally what happens is you get a lot of M&A, merger and acquisition. So that causes the Russell to outperform things like the S&P, NASDAQ, and the Dow normally during bullish times. Why? Because those small cap companies have a lot of potential to be acquired, grow their earnings at a much greater rate. You know, it's easy for a small cap company to have 100% year over year growth. It's very hard for Apple or Amazon to have 100% year over year growth right now that they're such behemoths. So more upside potential in a bullish market, Russell does well. I don't personally think it's that impacted by international events, no more so than any of the other exchanges would be. Some of these companies that are in the Russell are multinationals, right? I think that they're fine. So, yeah, I think just think of the broader market overall and how are they going to be impacted by it. All right, let's see. This is an interesting one. Thomas's thoughts on Novavax. I'm long and took a big loss today. I looked at this one before, Thomas. I have questions. I think it was NVAX. First off, I can't trade drug stocks, so this is a non-event for me. I'm going to start it from here just because I want you all to look at this one and put yourselves in the shoes of Thomas. And no, don't bash Thomas too bad. But Thomas, I got to ask you, why were you long? If I just look at the data I have here, you see large choppiness, and I don't know where you were long from. Maybe you bought it down near this demand zone. Okay. But look at this picture. I mean, the trend is your friend or the bend at the end. This thing looks really bad. It actually looks like a descending triangle right now, and to me, it just says it's going to continue on down. I don't really see anything here that says, hey, Novavax is ready for a big bounce. Now, we could make the argument that you're sitting right at this area of demand. I think it's a pretty ugly point right here for Novavax. I'm not sure what they do, what their drugs are. I'm sure there's a drug company. And again, it's in my trading plan. I'm not allowed to trade drug stocks, Apple or Cisco. Those are kind of the three that I've blacklisted from my trading world just because of past performance. But you took a big loss today. I don't know what to tell you here. I feel like you should wait for a little bit more. I mean, you're right at the lows here at 41.55. I would say if it breaks 41, I personally would cut it loose, let it go. You don't want to lose, but you also don't want to. You're riding a landslide. I mean, this thing looks ugly, and there's an unfilled gap that goes all the way back to 24. So, I'm not sure to tell you here, Thomas. I just kind of question what brought you into Novavax, especially when you have a price chart that looks like this. I know it looks like it's stalled a little bit here, but that trend was still really aggressively down. Isn't Novavax at a weekly demand? Yeah, it is. All right, we could go all the way back to this bad boy here is what you're talking about. Sure. You could definitely say that. That's why I said give it a little bit more, right? If you look at those lows from back there, your lows were 40.98, 40.50, and 42.10 for that 1 month period. Okay, so maybe you go to 40.50. If it closes below 40.50, you got to get out. And I know it seems bad because you're going to take a loss on it, but you're just dealing with stress, man. This thing could just go down for month after month after month after month. You just don't know. So in my experience, I think it's just easier to just unload them, chalk up a loss, lick your wounds, learn from it, make some notes as to why you won't make that mistake again or how you can improve that trade, and move on to the next one. I blacklist all. Have you seen the Pfizer numbers out and the vax shots? Oh yeah. I haven't looked at all that, but I'll tell you, it's easy for me, and the regular viewers here know I talk about my bad trades a lot because I think they're the ones you learn from. But some of my biggest losses have been pharmaceuticals and drug stocks, so I just go, done. I just don't know. I don't care. It doesn't hurt me at all to say I can't trade drug stocks. It doesn't hurt me at all to say I can't trade Apple or Cisco. Cisco I could probably trade again, which is just a matter of principle because I have an emotional attachment to that one after losing $15,000 in one day. That was brutal. Brutal. Merlin, will you look at DQ? Looking to add some more at this point. Sure, Chase. DQ. Is this right? I thought DQ is Dairy Queen. It's DACO New Energy. Is that right here, Chase? Is that the one you want me to look at? If it is, look at your weekly, okay? I'm assuming it's this one, this DACO New Energy. If you are in this one, notice your weekly. You have a shooting star, and now granted, we won't know what this looks like until the end, right? I'm not quite sure what it's going to look like at the end here, but we have a shooting star formation right now. This is actually a very bearish sign. So as far as adding some to this position, I would probably say no on DQ. Yeah, I got the right symbol in there. So just because of this pattern, and I would wait. This looks to me like it's going to end up breaking down. This might actually be a shorting opportunity once it breaks below the lows of this one. Leave me alone, Big Av. For some reason, I had Dairy Queen in my head. I don't know. I don't trade these ones. Let me go to snap mode here. I'll snap it on here just so we can see what the exact number is. Yeah, it looks like 59.11. No, that's the low. Hold on, why are you not snapping? Huh, interesting. It won't snap. There you go, 58.96. Looks to be about the low of that candle. So to me, you get anything down below that might actually be a shorting opportunity. Now, in the grand scheme of things, long-term trend going all the way back, yeah, this is a monster pullback and certainly could be some good addition to your portfolio. But it looks to me like you've got the super long-term uptrend. The intermediate term here is on a downtrend. I'd wait for a pullback into an area of demand, maybe down to the 47 mark, 48 mark to add in there. But yeah, unfortunately, I don't know about DQ. For some reason, I thought Dairy Queen. Oh, it tells you where my head is at. I'd love an ice cream right now. Let's see. And I got what else? Would I trade XLV? So I don't. Even in my... Obviously, XLV is the ETF for health, or one of the ETFs for healthcare. So it's got a bunch of biotech and pharmaceutical drug stocks inside of it. I just don't. I don't know why. I mean, yeah, I could potentially, but I don't see a reason to. There's so much other stuff for me to trade. I even have it on this list from an options perspective because this down here where I have the sector ETFs on the right-hand side, these are all the ones that I'm green lighted to trade in my 1% portfolio. And I do have XLV on there, but honestly, I've never sold options against XLV, puts or calls, so no. Let's see, just got paint yesterday, was $5 a gallon. Was 5 gallons, is now $4.85 a gallon. Are you telling me that prices of your paint are dropping, Karen? What country do you live in? Prices are going up. Let's see, looks like Novavax was just a flat in the curve winner. There are a lot of those COVID winners that came back to the real value. Yep, could be. I'm not sure if they do it. Kohl's, KSS, keep it simple, stupid. Here's Kohl's Corporation. As far as what's gone on, we know that a large part of this was due to the negativity with all the retail sector, right? Retailers were just getting beaten up. As far as for me to trade it, I really can't trade this one. Why? Because I don't have any strong supplier demand zones, nothing on the weekly, right? Let's go back to the daily here, and I might have a little bit better perspective on it. I think right here you can look and see you're coming into an overhead supply right around that $49 mark on it. But other than that, I just think you got this big unfilled gap going back to their dividend date when they popped up. So I don't find myself being really attracted, at least from a trade perspective on this one, Margaret. I'm definitely wanting cleaner levels. If anything, I'd be looking at a potential short as it rode up into that $49 mark, and then my target would be it closing this gap down here. When you look at what it did from 2021 to mid-2022, it really just had this really big sideways, ugly range with not a lot of clear trend. I really prefer things that have a nice clear trend. That to me is my favorite trade of all time. It's just a beautiful little trend. IBM, let's go international business machines. They had one, and it's kind of a rough one, Echo. If you look at the tail, the bottom tail is a little long, but yes, you could call that a shooting star. With a hammer next to it. Scared me at first, but now it looks good after. So, yeah, right. So, Echo, just so we get your candle names down, this first one that you have here, it is a shooting star because you have the nice big uptrend, right? I'll do like this. There you go. The last candle you see on the right-hand side of that chart, it is a shooting star, but it's not the best. Normally what you do, you want to have less of a bottom, but it's got a longer topping tail. So yes, shooting star. And then the next day, that's not a hammer formation. It's actually called a hanging man. And the reason it's called a hanging man is because it's at the top of an uptrend, right? If this same candle here on the hard red edge was at the bottom of a downtrend, that's a hammer. That's my favorite. But at the top, it's called a hanging man. But yeah, now all of a sudden things are starting to pan out, looking pretty good for you on IBM. So great, nice, good trade on IBM. Let me see, do I have any other questions? I had one more, I think. Let's see, do I have TradeStation open here? How much time do I got left? I got a few minutes left here. Let's just do it. So, question came in from Michael. He says, any advice on trading futures during rollover days? I am with TradeStation. They automatically change the continuous contract to the front month on Thursdays. The problem is the low volume, especially for the first few hours of the day. The spread gets big, the price freezes and skips around on the trading matrix for orders, and the chart lags. Oof, God love TradeStation. Very frustrating. I suppose I could continue to trade the current contract, but my charts would not match. Yeah, that's actually what I would be doing. I would be using the current contract instead of the continuous. So I always like to look at, as you guys can see on this show, I'm always looking at the continuous contract because I'm analyzing the bigger picture. Generally, that's how I'll start. I look at the big picture, whittle my way down to the smaller time frame. So that's how I start. But if I'm trading futures, I'm using the current contract, period. And, a little bit right around 1 week before expiration, sometimes a little bit more than that, I'll flip over to whichever one has the most volume, and you can just pull up the futures contracts to see which one has the most volume. You'll see there's usually a big rollover when it happens, and just start using that one. Unfortunately, you're right, Michael. Those prices, the charts don't necessarily match up. They might be slightly different, but that's the real price. So those rollovers, especially in continuous contracts, if they're unadjusted, you get all kinds of weird little jiggy stuff. That's just the nature of the beast. So I would say use the current contract when you're getting your rollover and you know what's going to happen. One other thing, Les, you asked a question about retirement, and unfortunately I don't know. This question was dealing with 401ks and retirement. Like, if you're a monthly payroll person, they take your money out, and generally the first of the month is when you get those allocations, and your cash that gets withdrawn gets sent over and input into whatever mutual funds you purchase. But, what happens if you get paid twice a month? I don't know. Unfortunately, not when I don't know, Les. You have all kinds of great questions. Not when I don't know. Let's see. What else do I want to get? Christina says, Disney, of course. So here's Disney, and Disney has looked really bad on the daily. I mean, they've gone from over 200, you're at a 50% discount right now. Not looking great. Let's go to a weekly just to see if there's anything off to the left that might be noteworthy for us. All right, so we can look at it from here. Even though you have this small little area of congestion for about a month back in April of 2020, it still doesn't look great. So I'd be looking at Walt Disney as selling the rallies up, right? Looking for shorting opportunities. Everything here just speaks of weakness on the weekly time frame. And when I go to the daily, it just echoes that. So, maybe you go for a breakout trade and say anything, if it closes below 100, start to, look for shorting opportunities below 100. I know it looks difficult to look back at a price chart and say, man, it's 50% off. How much lower can it go? Well, the answer is it can go a lot lower. Could Disney go to zero? Probably not going to happen, but could it happen? Sure. I personally would not be buying Disney right now. I'd be looking more towards shorting these rallies because, as you notice, it seems like every time it rallied up, it just sold right back off. So, unfortunately, not the best looking charts out there, Christina. Netflix buying Roku. Yeah. A Roku. Does anybody here use Roku? Let's go to ROKU. So here's Roku. Not the best data. They had a huge day yesterday on the first announcement. Now it's down 9%. Basically, it gave back every single penny from the announcement from yesterday. And here's Netflix. I have not looked into the deal much to see exactly all that's going on. But my problem is when you do a merger acquisition, when markets are falling, that's usually a bad sign. All right. Usually when you do M&A, you buy somebody, it's when markets are moving up and things are looking good. Kind of strange to see as this market's been selling off, and maybe, Netflix is saying, I got a good deal out here with Roku, etc. But I don't know. I don't see the love going on for Netflix. Thank you, Jim Cramer, because you're probably the one that killed it back here on January 3rd when you said to buy it at $597. But and again, I think the point I made here before was if we get a close above 20, call it 205, then maybe I'll buy some Netflix. And so I'm not going to buy anything based off of my opinions about it. You know, my opinion about Netflix or Roku. I can't do that. It's easier for me just to look at this and say, all right, what is the chart telling me? And if I get a close above 205, that tells me, yep, we've now officially started to make some higher highs, and then I might feel better buying some Roku or buying some Netflix, and maybe even, you know, buying some call options on Netflix to get a little bit of leverage out there. But right now, it's still just telling me it's chopping sideways, and I got nothing doing. So there you go. Let's see. Merlin went really long yesterday. Oh, yeah, my 2-hour show yesterday. Let's see. Michael had a funny comment here. It says, now that Facebook has become Meta, there's no longer FANG stocks. They should be called Magna. Well, I mean, if you look at the stock, right, it's now Meta. So you're right. I mean, we should change it to Meta. But, you know, who knows? I think all those acronyms are just dead anyway. I think it's, it's fun to have them for a little while, and then ultimately they'll just disappear and some other new mantra or slogan will come up for some other market segment. Okay, so I wanted to show a couple different things here. Some of you had asked about TradeStation, and, you know, I don't really use it much. I have some money sitting there for trades every now and again. But let's see, I'm on a live account here, so this is not a simulator one, as a lot of people, it's funny, having watched a lot of, I can't say it. I don't want to offend any of my guests, but a lot of people just sit in simulator. And so if you ever watch other people's shows or other programs out there, especially when people say, oh, I'm making trades, just look for the word SIM. A lot of times it's in front of another number. The vast majority of people out there that are saying they're doing live trades are all in simulator, and it's a total crock, and they hide it too. It kind of drives me nuts. Yeah, Big Eb, exactly. Oh, Netflix was $700. It has to be a good deal. Yeah, if you loved it at $700, if you liked it at $700, you should love it at $400. You should scream for it at $200, and boy, back up the truck when it gets to $100. But by the time it hits $50, it could keep on towards dropping. So one of the things I wanted to show you was, since I don't pay the data feeds over here, they don't give me a lot of stuff, is this. So I'm a huge fan of watch lists, and I think a lot of this what it does is allows me to quickly run through the broad markets or any market segment that I want and find the things that I want to trade for, that I want to trade. So, one of the things I look for, I use Bollinger Percent B, and this is available now on a lot of different platforms. But if you look at Bollinger Percent B, what it tells you is how far above or below the current Bollinger Bands it is. So notice these guys right here. Right now there are 43 stocks in the S&P 500. 43 of them are below the lower Bollinger Band, meaning some serious overselling today. Now, are there any that are above? Not one is above the upper Bollinger Band. If it was over 100 here, it would be above the upper Bollinger Band. So there's nothing here that's overbought. Surprise, surprise. I also look for things like hammer formations. So here it says Live Nation. Great. Hate Live Nation. It says Live Nation has a hammer formation. Really? All right, well, let's check it out. Who knows? That might be a play for tomorrow. So obviously Live Nation, not showing it there, but if I put it on the daily time frame, yeah, you've got a tiny little hammer formation there on today's trading for Live Nation. It's not the best, right? It feels like it's just kind of sideways action. But these are just little scans I like to run. But the Bollinger Percent B one, let's look at some of these. Peg. Any Steely Dan fans here? Peg, it will come back to you. Hey, you got it all. All right, anyway. So you notice I don't have Bollinger Bands on the chart here. I don't need them. You shouldn't need Bollinger Bands to know that this is well below the lower Bollinger Band. So in a situation like this, if I had PEG, which is Public Service Enterprises, if this was coming into a strong area of demand, which would be a little bit further down, this might actually be a buy point for me. Let's see about Well Tower, same thing. Well, it's extremely oversold, but it doesn't have high climactic volume, and it's not at an area of demand. So I just keep on moving down the list. Right? Same thing. I've got Excel Energy. Not near an area of demand. Even though it's oversold, it doesn't mean I have to make a trade. Ooh, Health Peak Properties. Well, that's ugly. It's all the way back down. This could potentially be one. This is back to the lows of October of 2020. Let's see, CliK. I think it's really a bad name if your ticker symbol is CliK, S-Y-K. That just doesn't seem like a good ticker symbol. How's your trade going? Oh, man, it's CliK. Dominion. So I'm not finding anything on this, even though they're way oversold. I've got nothing that screams at me and says, hey, there's some great potential trades here. Yeah, this is probably the only one here, which is Alexandria RE Equities. You notice that there was this low point way back here. I've put this on a weekly just to see. Okay, so you notice if I put a line across the bottom here, this is a weekly time frame. It goes all the way back to this low from October of 2020. Now, does that make this a good buy? No. Could it be a potential buy point? Absolutely. So why not map out a trade for it? And if things start to move up and prove that you can, capitalize on an upside move because it's actually moving up, then go for it. But I love looking at things like this. And I know that a lot of you are RSI traders and MACD. You can add in anything here. You can add anyone. So let's say, for example, I'm going to go here and add in RSI, insert analysis technique. Let's go to RSI. Why are you not working? Why not working? I have to scroll. Been so long since I've used this one. Indicator. And we're going to go relative strength. RSI. There it is. Add that one in. Okay, so it's going to take a second to load up here, but remember, there's when you look at RSI, you're looking for overbought and oversold. It even tells you here, but normally I would hide these columns. You just don't need those ones. They're kind of useless. I mean, once you know what the parameters are. So 70 and 30 are the parameters. If I double click on this, you notice that there's a couple here. Peak, anything here that's below 30 is technically oversold. Anything that's above 70 is technically overbought. So we'll just show you real quick, just so we can see some of these price charts. MPC, overbought. Yeah, man, Marathon just keeps going. Unbelievable. Valero, surprisingly, they're all gas. Think inflation's under control? Energy stocks are just screaming, man. Here's Phillips 66. They're all just screaming to the upside. Almost all of these are energy. Now let's see about the oversold, because I look for maybe buying opportunities. Here is peak. No. And this is on a weekly that I'm looking at, by the way. I could go back to a daily here. But anyway, the point I'm trying to make here is it just allows me to remove a lot of the stuff I don't need to look at and maybe find me some opportunities. So, for example, here we have Church and Dwight. Surprisingly, on a weekly basis, has actually decent liquidity. Let's go back to a daily time frame. And you can see here Church and Dwight selling off fairly aggressively, but it's coming down into areas of demand right over here where we haven't seen for a while at about $84. So this one might be a decent buy as well. You got Hormel Foods. I could go on and on with this, but I'm a huge fan of use these indicators in your screeners. It will allow you to save yourself tons and tons of time with regards to analysis and your trading. All right, economic calendar for tomorrow. Earnings-wise, you got nothing going on, but the economic calendar, there is some big stuff. As you guys noticed, CPI numbers are coming out tomorrow, and the expectation is it's going to start to surge back up. It's expected to go from 0.3% to 0.7%. Anything above 0.7, expect a violent Friday afternoon session. I'll be listening to the announcement from the car as I'm driving up to Northern California. Other than that, you have consumer sentiment and expectations for the U.S. You also have, for Canada, they have the unemployment rate and capacity utilization, which is expected to stay pretty much where it was. And that will pretty much do it for your economic calendar for tomorrow. Now, as I mentioned, I am not going to do a show tomorrow because I'm driving. I got to deal with a piece of property I have up in Northern California, so hopefully getting that all taken care of and that one. But I'll be back to do a show on Monday. Next week, I'm going to have David Warner on the program. Fingers crossed, I'll have Bill Addis and hopefully some other guests on the program. So that's my busy week. That said, I don't have anything to cheers everybody here, but I will cheers you to a great trading day tomorrow. I think you actually are going to have a wild one. I think Friday's going to be a really active day, especially with that CPI number. If it's out of whack with expectations, then all of a sudden people will be speculating and you get real volatile moves. I don't have a specific popcorn trade of the day for tomorrow just because there's nothing important coming out with earnings, Kirsty. There's like nobody, it's all international companies tomorrow. So no popcorn trade of the day. We'll find something. Generally, my popcorn trades of the day are earnings calendars. So, all right, everybody, that's going to do it for me. Hope you all enjoyed. Have a fantastic remainder of your day. Be careful out there on Friday, and I'll see you all on Monday. If you have comments and questions, send them in to TraderMerlin@gmail.com or put them down below the YouTube video. That said, have a fantastic day. I will see you all on Monday.